Howdy, y'all. I think there's some confusion out there on what makes a good lender and then what type of lenders are out there. All right. So some realtors, some clients think that, well, you didn't get my buddy financed or you didn't get my client financed, so you can't be a good lender. Right. That's something there. Right. So here's my advice as far as real estate agents or as a buyer going into the market. First, you need to understand there's two different types of lenders, basically. Right? There's one like a broker, sort of how we're set up. We're going to be out there, we're going to shop the competitive market, and it's going to meet Fannie Mae guidelines, right? The vast majority of your mortgage companies are going to make these loans, and they are the best rates, right? If you're chasing the best rates, that's where you want to go, right? Because they're going to make this loan and they're going to sell it on the secondary market. That's why Rocket recently bought Mr. Cooper, right? Rocket creates a lot of loans, and Mr. Cooper services the loans. So now they can make money on the front end and the back end, right? That's not how most of the competitive market is made up. Most have very low overhead. They don't have a place of business. They have an office, and that's it. There's no branches you can go in like your Wells Fargo or your other banks, right? So with your banks, your credit unions, a lot of times those companies, they don't always sell their loans on the secondary market. So what does that mean for you as the client? If you do not meet Fannie Mae guidelines, those are routes that you can go that may be a little bit higher interest rate, maybe a little bit higher down payment, but they may be able to finance people that have higher risk in their credit, right? Like say you got a repossessions, what else? Charge-offs. Oh my God. I've seen recently charge-offs from $30,000 to $70,000. And the client's like, well, why can't you fund me? Well, you're a risk. You need to go somewhere else, right? So my advice when you go look at it, right, when you're looking for a lender, you want to look for a lender who has options, right? So if somebody says, hey, I'm a broker, fantastic, go there. That's going to be the most competitive. And if they can't finance you, then you go look for one of the alternative lenders who has loans that they keep, okay? They may be a little on the predatory side sometimes, or that's what they may feel. Like, oh, the high rates, but you're a risk. So you got to look at that. That's my advice, guys. You know, the best lenders are not going to give you a bunch of free stuff. They're not going to show up at all your open houses. They're not going to fund everything under the sun. And let it be known this, not every lender is going to do every type of loan. Gosh, we do everything from hard money loans, rental property loans, construction loans, equity loans, refinances, reverse mortgages, commercial loans. But with all this, we have a team too, right? We have dedicated processors. We also have dedicated people that go into these other realms. I'm not doing all the work. Some people get freaked out like, all right, why don't you do all my work? Because I can't do it all. Not everybody can do it all. It ain't going to happen. It's called a business, right? You know, it's like when you walked in our sign company before COVID. We had 6 full-time employees. Can't, yeah, right? It's a business. So that's my 2 cents for the day. Got questions? Hit us up. We'll give you the right answer. If you don't like it, it's still the right answer.